Hey there, it's Jared Hamilton with the Hamilton Group at Cherry Creek Mortgage, and welcome to another edition of Java with Jared. Hope you guys are doing fantastic, and once again, happy Friday. Well, it's another good Friday. Rates are better at the end of this week than where they ended up last week again, and that's primarily due to the kind of trifecta that we've been talking about, where there's some concerns over the U.S. economy, there's concerns over the global economy, and there's also geopolitical concerns, and we're seeing those concerns manifest into better interest rates. From an economic data standpoint this week, we saw retail sales, jobless claims, and the Empire State Manufacturing Index all come in worse than expected. It didn't show that things got actually worse, but it just wasn't as good as what the market was hoping for a robust economy. So it's just showing that the economy is slowing here and that the Federal Reserve does need to keep interest rates lower for at least, the midterm. We also saw the Producer Price Index come in, and that measures inflation at the wholesale level, and that showed just right in line with expectations, where the overall number was an increase of 0.1%, and the core rate, which strips out food and energy, that showed an increase of 0.2%. That's exactly what the market was expecting, and showing that inflation is definitely under control. So the Federal Reserve, again, does have room to keep interest rates low because the economy is not doing that great, and inflation needs to be a little bit better. Other things that really sparked a rally today in mortgage-backed securities are the geopolitical concerns over troops from Russia moving into Ukraine, and that really spooked the market. The stock market actually started the day out okay and then suffered losses, so money flew from stocks into mortgage-backed securities, so there was a flight to quality going on, which really caused interest rates to get dramatically better. We're off the best levels of the day, but we're seeing interest rates approaching the best levels of 2014, and that should continue. So maybe even later on into this year, we might see rates where they were the start of 2013, which were phenomenal. So again, geopolitical concerns over the U.S. economy, and also concerns over what's going on with the global economy. And Germany also said that things are not doing that great there. So we've got that trifecta really helping interest rates, and that's going to cause interest rates to remain really good. So get out there, tell your clients we're seeing the end of the summer push to buy homes. So make sure your clients know that now is a wonderful time to buy a house, and there's more inventory out there. Rates are going to remain great, so get on the phone and keep that activity up. If you have any questions, please give me a call. I'll keep you informed. I mean, these geopolitical concerns can cause some volatility, so we'll see if interest rates continue to go on these levels, if things kind of temper down with Ukraine and Russia. But we'll keep you informed with what goes on next week. We're going to see some info come in from the housing market, and we'll let you know what happens with that. Hope you have a wonderful week. Thanks for joining me with Java with Jared, and we'll talk to you soon. Bye-bye.